Hey guys, welcome back to the Wall Street Petting Zoo podcast. This is our zoo tour episode for this week. It's an educational segment, and this week's topic is how to play oil inventory reports. These are reports that come out every week. All right, first of all, I want to tell you just the basics. So there are two oil indexes. One is the WTI crude oil index, and the other is the Brent crude oil index. WTI tracks US crude oil prices, and Brent tracks global crude oil prices. So if you come to tradingview.com and you look up here at the top, they've got the WTI price right up here at the top. It's 56.91 right now, $56.92 a share per barrel, I should say. And this is the WTI price. So this is the US crude price. And generally, the US price and the Brent price are pretty well correlated, although the Brent price tends to be higher than the WTI price by several dollars. All right, so the other thing you need to know is that there are these Velocity Shares 3X crude oil ETNs. So these are basically exchange-traded mutual funds that track the both a combined index of both the WTI price and the Brent crude oil price. Okay, the tickers are UWT for the long side. So if oil goes up, UWT will go up, and on the short side, DWT. So if oil goes down, DWT will go up. All right. So if you're expecting oil to go down in price, you want to buy DWT. If you're expecting it to go up in price, you want to buy UWT. These are leveraged funds, so they're trying to get 3 times the movement. You can see here they haven't quite achieved it today. Crude oil today, the WTI price is up almost 3.5%, 3.3%. And the UWT price is up about 8.19%. So it's not quite 3 times, but still you get a lot of movement on this as the crude oil price moves up. So I like to play these on Wednesdays, which is why I'm posting this video on a Wednesday. Today, this is not something that I played, but I just want to show you how to play it should you feel so inspired. So first thing you need to do is you need to know what the analyst estimate of crude inventory for the week is. These are U.S. crude inventories. Basically, the U.S. has these big warehouses full of crude oil. They've got a certain number of barrels in them. If the inventory is increasing, generally that means that the supply is larger than demand, which pushes prices down. If inventories are decreasing, that means that demand is larger than supply, which pushes prices up. Okay, but on Wednesdays, the market is going to react to the crude inventory reports. There are 2 agencies that put out crude inventory reports every week. The American Petroleum Institute is the one that matters a little bit less. They put out an inventory report on Tuesday night, and you only have access to that inventory report if you subscribe to it. But the one that's a little bit more important is on Wednesday morning at 10:30 a.m. Eastern Time. That comes from a governmental organization called the EIA, available at their website, eia.gov. So we'll talk about that in a moment. But before we look at the actual oil inventory report, we need to know what the analysts are expecting for the week, okay? So there are 2 tools you can use to do this. Estimize.com has in their economic indicators section, United States change in crude oil inventories. Okay, this is basically user submitted data on what the crude oil inventory numbers for the week are expected to look like. So you can see here the Estimize consensus for the 22nd week in 2019 was that we would have a 30 million barrel draw on crude inventories. Okay, and they were expecting a range anywhere. They had a confidence interval from 2,500 million barrel draw to a 1,511 million barrel build. Okay, so a positive number indicates that inventories are increasing. negative number indicates that inventories are decreasing. Now you can see the actual number for the week came in at 6,771 million barrel build. So it was a much larger crude oil build, inventory build than the market expected. You can see it's well outside the confidence interval for the week. So it was a big surprise. And so on Wednesday, after this report is released, the EIA's report is released, I would expect oil prices to go down for the rest of the day because we saw much weaker demand and much stronger supply for the week than the market expected. Typically, when this report comes out, the market will take an hour or two to react to the news, kind of waffles a little bit for an hour or two, and then it will, if there's a big surprise like this where the number falls well outside that confidence interval, then for the rest of the day, the oil price will move in whichever direction the inventory report predicts. So it's kind of nice because it gives you some time to kind of get in at the best price into one of those leverage funds, and then you can sort of ride it for the rest of the day to pick up a nice gain, a nice profit. Okay, so that was the 22nd week of 2019. You can see the most recent report, which came out earlier today. It would have come out 8:30 my time because I'm a little bit behind the Eastern time, but it comes out 10:30 a.m. Eastern time. Okay, analysts were expecting 1379 million barrels. I'm sorry. The analysts were expecting 1,066 million barrel build, and the actual numbers came in at 1379 million barrel build. So it was very close to the analyst estimate. And so the inventory numbers for this week would not have moved oil prices in any particular direction, which is why I didn't play this today. Okay, so once you've looked here and seen what the sort of user prediction is, 1,000 million barrels inventory build, there's another tool that you can look at just to kind of get that's a user number. Remember, user submitted number. This is what the actual analysts are thinking. Investing.com has their economic calendar. They've got a section on EIA crude oil inventories that gives you the forecast right here, analyst forecast for the following week. They haven't posted their forecast for next week yet, but this gives you the forecast for this week, which was 1.5 million barrels. So you can see that the analysts were expecting a slightly larger inventory build than the users over here at Estimize were expecting, but in a very similar range. I like the Estimize because it gives you these confidence intervals, so you can see just how far outside those confidence intervals the actual numbers were. But this gives you kind of a more official forecast number. When news organizations write about crude inventory numbers, typically they're using this number, the analyst forecast, not this user submitted number. Okay. But then, of course, once the report is released, they will report the actual number, which in this case was slightly below the forecast, but not significantly below the forecast. All right. The other thing that you need to know going into an EIA report is that other news may be significant. So oilprice.com is a great source for news that affects oil prices. Generally, if the inventory numbers are really strong, then the inventory numbers are what's going to move oil prices for the rest of that day. But if the inventory numbers come in weak, then you have to pay attention to other news. And I typically don't try to play other news because other news is a lot less predictable than inventory numbers. So I only play this when there's a really clear picture, a really clear surprise on the oil inventory report versus the consensus. So I would not have been able to predict that oil would go up today. As far as I can see, there's no strong reason for that to happen. But the oil market's reaction to news is somewhat mysterious, with the exception of these oil inventory reports that I find to be quite predictable. Coming over here, this is the EIA website. This is where you're going to find the EIA's weekly report. EIA.gov/petroleum/supply/weekly. This is our weekly petroleum status report. and the critical link is right here. You can see it's released after 10:30 a.m. Eastern Time. The weekly petroleum status report highlights. This is all you need, is this highlight report right here. And if you were to click on this before 10:30 a.m. Eastern Time, you would see a page that says, this page will auto load as soon as the report is posted. And then you can just sort of sit there in front of your computer. You could even log in a couple minutes before the report is posted, and you can just sit there and wait for the report to auto load. That way you can be the very first person to read that report and assess what it says right at 10:30 a.m. Eastern Time as it posts. In this case, though, I am coming in a few hours after the report was posted, so the report will already be here. So I click that PDF link. You can see summary of weekly petroleum data for the week ending November 15th. And the number that I want is right here in the third paragraph. U.S. commercial crude inventories increased by 1.4 million barrels from the previous week. That single line in the report is all that I really care about. I would then come back to my estimize here, and I would say, okay, that's 1.4 million barrels is slightly above the estimized consensus, but it's well within these error bars here. So that's not a big surprise. If this weekly petroleum status report had said crude oil inventories increased by 10 million barrels, then that would really be something. That means this data point would come in right here, which would be way outside my error bars. And that would tell me that demand, either supply was way stronger or demand was way weaker for the week than the market expected. And that's a big surprise, and I would buy the DWT fund in order to ride oil down. If, on the other hand, it said that we had an oil inventory reduction by 10 million barrels, that oil inventories actually decreased by 10 million barrels, then I would expect this data point would be down here. It would be way outside the error bars on the downward side. And then I would want to buy the UWT fund to ride oil prices up for the day. Generally, I only play this for one day, but you could hold it overnight, potentially hold it for 2 or 3 days, because sometimes when there's a big surprise like this one here, or this one here, or this one here, that will move oil prices for 2 to 3 days. But you're pretty assured to get a movement for one day, but whether it continues for another day or two depends on whether there's any big news that would move oil in a different direction. So it's definitely riskier to hold these funds overnight. You're much safer to just play it for one day. Typically, if you get a big surprise like this, you can get a 2 to 3% scalp in UWT or DWT over the course of that first day. Sometimes when you get a really big surprise, you can get even more. You can sometimes have really profitable days. Playing these crude inventory reports, you can see they don't come up that often, but they do come up. You get a surprise. Let's see how many big surprises we had this year. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So we've had about 12 big surprises over the course of a year. So if you add that up over the course of the year, if you could make even just an average of 2% each time, there's a big surprise. You've just made 24% on your money over the course of a year just by playing these oil inventory surprises. Okay, so this is a pretty nice way to make a day trade. You do have to be aware, though, that sometimes there will be other news that moves oil in a direction other than the one that you're predicting. So this is not a guaranteed return. It's just a really high likelihood return. So you got to be aware of that. Hey, thanks so much, guys, for watching this video on how to play crude oil inventory reports. In a future video, I will talk about how to use more long-term outlook data on oil to play oil over the longer term. If you like this video, if you got anything out of it, please give us a like, comment, or share. You can also follow us on Facebook or Twitter beneath the video. And please come back for another educational video next week. Thanks so much for visiting the Zoo Tour.